You need to understand what just happened, because the game changed and most people don't even know it yet. Silver touched $99.14 today, January 23rd. That's not just another price milestone. That's the moment when the world's governments confirmed what a few of us have been warning about for months. Silver is no longer a commodity you trade for profit. It's a weapon they're using against each other. And you're caught in the middle. I'm going to show you exactly why this matters more than any price chart you've ever seen. Because when nations start hoarding strategic materials and cutting off supply to their enemies, the rules you thought you understood don't apply anymore. The paper contracts don't matter. The futures markets don't matter. The only thing that matters is who controls the physical metal. And right now, that's not you unless you've already got it in your hands. Let me start with the announcement that changed everything. On January 1st, 2026, China officially reclassified silver as a dual-use strategic material, not a commodity, not an industrial metal, a strategic asset on par with rare earth elements and defense technologies. They didn't just slap a new label on it. They created an export licensing system where only 44 approved companies can ship silver out of China, and every single shipment requires government approval. Think about what that actually means. China controls roughly 70% of the refined silver that big tech, AI infrastructure, solar panels, and electric vehicles desperately need. They just built a wall around it. When Beijing decides which companies get licenses and which shipments get approved, they're not making business decisions. They're making geopolitical calculations. Who's an ally? Who's a rival? Who gets the metal they need to build their economies and who gets starved out? This isn't economics anymore. This is warfare by other means. Now here's what nobody's connecting yet. Russia followed the same playbook. They extended their ban on precious metal scrap exports, including silver, straight through 2026. They're allocating over $500 million to silver reserves in their national budget. Mexico, the world's largest silver producer, just implemented export licensing rules that effectively cut the United States off from refined silver without government approval. You seeing the pattern here? This is what they call resource nationalism, and it's spreading like wildfire. Every major nation is looking at their strategic material supplies and asking the same question. Do we have enough to fight a trade war? Or worse, a real war? And when they don't like the answer, they stop exporting. They hoard everything they produce. They weaponize supply against their competitors. India just imported a record $5.9 billion worth of silver in the last 4 months. That's a 400% increase from the end of 2024. 400%. This isn't jewelry demand. This isn't industrial manufacturers buying what they need for next month's production. This is strategic stockpiling by a nation that sees what's coming and wants to secure supply before it disappears entirely. When countries start buying like there's no tomorrow, it's because they think tomorrow might look very different than today. Let me give you some context so you understand how unprecedented this is. In 1971, President Nixon closed the gold window. He unilaterally told the world that the US dollar was no longer convertible to gold, ending the Bretton Woods system and changing the entire structure of global finance overnight. Nations that had trusted America's promise to back dollars with gold got blindsided. The price of gold exploded. The currency system that had defined the post-war era collapsed. That was a unilateral strategic resource decision by one country that reshaped the world. Now we're watching the same thing happen with silver. Except this time, it's not one country acting alone. It's coordinated resource nationalism across multiple major economies simultaneously. China weaponizes silver. Russia weaponizes silver. Mexico controls export licenses. India stockpiles frantically. The United States is scrambling to pass legislation for a $2.5 billion strategic mineral reserve because they finally realize they don't have domestic supply of critical materials. This is bigger than 1971. This is what happens when the world fractures into competing blocks and strategic resources become the new currency of power. And here's what makes silver different from any other strategic material. It's not just military. It's not just industrial. It's both in ways that nothing else matches. Every advanced weapon system uses silver. Semiconductors for missile guidance, radar systems, electronic warfare, night vision, communications equipment. Defense contractors are scrambling right now because their supply chains just got cut off by nations they're in strategic competition with. You can't build a modern military without silver, and you can't get silver anymore without asking permission from governments. That might be your adversary tomorrow. But it doesn't stop at defense. Silver is the most conductive element for electricity that exists. That means it's irreplaceable in the technologies defining the future. Solar panels require about 20 grams per unit, and solar deployment is accelerating globally as nations try to break free from oil dependence. Electric vehicles use 25 to 50 grams each, and EV production is scaling up across every major economy. AI infrastructure depends on high-performance semiconductors that need silver. 5G networks need silver. The green energy transition everyone talks about, it runs on silver. And the nations that control silver supply now control who gets to build the future economy and who doesn't. Let me show you what's happening on the ground right now, because the official numbers don't tell the whole story. In early January, physical silver in Japan and the UAE was selling for $130 per ounce when dealers could even find inventory. That's more than a 30% premium over the paper spot price you see quoted on financial websites. When physical metal trades at massive premiums over paper prices, that's your market screaming that the paper system is broken. The contracts are meaningless because they're not backed by real metal that can actually be delivered. COMEX registered silver inventory is down to around 124 million ounces. That's the metal actually available for delivery, not the eligible inventory that's just sitting in storage. Registered inventory has declined 70% since 2020. 70%. While that's happening, open interest in futures contracts keeps growing. You've got more and more claims on less and less metal. This is fractional reserve banking applied to silver, and we all know how that story ends when everyone shows up to withdraw at the same time. The LBMA vaults in London tell the same story. There are reports of significant redemptions and physical withdrawals as institutions that used to be comfortable holding unallocated paper positions suddenly want allocated physical metal they can verify actually exists. When the trust breaks down and everyone wants proof, they actually own something real. That's when the system can't deliver. The music's still playing, but there aren't enough chairs. And people are starting to notice. Now let's talk about Basel III, because this is accelerating the crisis in ways most people don't understand. New banking capital rules that took effect January 1st in Europe are forcing banks to reassess their unallocated paper, silver holdings. Banks that used to hold silver as an asset on their books now face higher capital charges unless they hold physical allocated metal. What do you think happens when banks across Europe simultaneously try to convert paper positions to physical? They compete for the same shrinking pool of available metal. They bid up the price. They create delivery failures. They expose just how little physical metal actually exists relative to the paper claims. Here's what this means for you personally. If you own shares in a silver ETF like SLV, you don't own silver. You own shares in a trust that's supposed to hold silver. And you're hoping that if you ever need to redeem those shares for physical metal, the trust can actually source it. But these ETFs were never designed for mass redemptions. They were designed as trading vehicles where people buy and sell shares to each other. When redemption requests start spiking because people want real metal instead of paper promises, the system breaks. The fund can't source enough physical to satisfy redemptions. They suspend redemptions or settle in cash. Congratulations! You just found out you didn't own silver after all. PSLV, the Sprott Physical Silver Trust, is different because it holds fully allocated physical metal in the Royal Canadian Mint and allows for physical redemption under certain conditions. But even that has requirements and minimums. The point is that any structure where you don't personally control the metal introduces counterparty risk. You're depending on someone else to honor their promise, and in a crisis, promises get broken. The U.S. government finally woke up to this reality. On January 15th, bipartisan lawmakers introduced legislation to create a $2.5 billion strategic mineral stockpile. Silver is on the list of critical minerals. Think about the timing. For decades, the U.S. let its strategic silver reserves get sold off. They didn't think it mattered because you could always buy silver on the open market whenever you needed it. Now they're scrambling to build stockpiles again, because they realize that in a world of resource nationalism, the open market doesn't exist anymore. Your competitors control supply, and they're not selling to you at any price. President Trump issued a proclamation on January 14th, declaring 41 critical minerals essential to national security. Silver's on that list. This isn't just about securing supply for American manufacturing. This is about recognizing that, without these materials, you can't build weapons. You can't build communications infrastructure. You can't maintain technological superiority. Strategic materials have become the choke points of national power, and silver is right at the center of it. Mexico's situation is particularly interesting because it illustrates how quickly resource nationalism can spread. Mexico is the world's largest silver producer. For years, they operated under relatively free trade policies, letting market forces determine where their silver went. Then they watched China lock down exports. They watched Russia restrict supply. They saw India stockpiling frantically, and they asked themselves a very reasonable question. Why are we shipping our most strategic resource to countries that might be our economic rivals, or worse? So they implemented export licensing. If you want Mexican silver now, you need government permission, and the government decides based on political considerations, not market prices. Peru, the second largest producer, is watching this closely. They haven't implemented export controls yet, but the political pressure is building. When you're a resource-rich developing nation and you watch China and Russia successfully weaponize strategic materials for geopolitical advantage, why wouldn't you do the same? The playbook is proven. Resource nationalism works. It gives you leverage. It protects domestic industries. It makes sure your own country has secure supply before you worry about anyone else. This creates a feedback loop that accelerates the crisis. As more countries restrict exports, supply available to the open market shrinks. As supply shrinks, prices rise. As prices rise, more countries decide they better lock down their resources before prices go even higher. Industrial users panic and start hoarding because they can't risk supply disruptions. Investment demand surges as people realize this is the last chance to secure physical metal before it's completely unavailable. Every action feeds on itself, creating a spiral that's very hard to stop once it starts. The Chinese move is particularly calculated because of the timing. They implemented export controls right after silver prices had a massive run in late 2025, hitting peaks around $84 before pulling back. The Western financial media covered the pullback as if the rally was over. Silver had topped out, everything was fine. Then January 1st hits. Export controls take effect, and silver immediately resumed its climb toward $100. That's not coincidence. That's strategic timing. Let the market relax. Let traders think the move is done. Then cut off supply, and watch what happens when reality hits. The dual-use designation is particularly significant because it puts silver in the same category as technologies that have both civilian and military applications. Semiconductors are dual-use. Supercomputers are dual-use. Advanced materials are dual-use. When something gets classified as dual-use, it becomes subject to national security export controls. That means the government can stop exports for security reasons, regardless of commercial considerations. You might have a contract. You might have a buyer willing to pay market price. Doesn't matter if the government says no, for security reasons, the transaction doesn't happen. This is exactly what China did with rare earth elements, starting in 2010. They controlled 97% of global supply. They started restricting exports. Prices exploded. Countries that depended on Chinese rare earths for their high-tech industries got squeezed. Japan, the US, Europe all scrambled to develop alternative sources, but that takes years. In the meantime, you either pay China's price and accept their export restrictions, or you don't get the materials you need. That's economic leverage converted into geopolitical power. Now they're running the exact same playbook with silver. Except this time they're not alone. This time, Russia is on board. Mexico is on board. Multiple major economies are simultaneously deciding that strategic materials are too important to let market forces determine allocation. When that happens, the market system breaks down. Price doesn't clear supply and demand anymore, because supply isn't for sale at any price. Nations hoard what they have, and if you don't already have secure access, you're out of luck. Industrial users are caught in an impossible position. You're a solar panel manufacturer in Germany. You need silver to make your product. Your supply chain used to run through China. Now China's export licenses are going to prioritize Chinese domestic industries over foreign customers. You can apply for an export license, but there's no guarantee you get one. And even if you do, There's no guarantee it gets approved next month or the month after. How do you run a business with that kind of supply uncertainty? You can't. So you either stockpile like crazy, driving up demand and prices even more, or you shut down because you can't source inputs. Defense contractors face even worse problems. You can't build missile guidance systems without silver-based components. You can't build radar systems. You can't build electronic warfare equipment. And you're trying to source materials from countries that are strategic competitors or outright adversaries. Even if they're willing to sell today, what happens if geopolitical tensions escalate? What happens if there's a crisis over Taiwan or Ukraine or the Middle East? Your supply gets cut off overnight and your production line stops. This is why the US government is now treating silver as a national security issue. It's not hyperbole. It's recognition of strategic reality. The price hitting $99.14 today isn't just another number on a chart. It's the market's way of telling you that the old system is dead. For decades, silver traded as a commodity. Supply and demand found equilibrium through price discovery. Producers sold to whoever paid market price. Industrial users bought from whoever offered the best terms. Investors speculated on price movements. The whole system operated on the assumption that metal was available if you wanted. That assumption is now gone. In the new system, availability is political, not economic. You don't get metal because you're willing to pay the price. You get metal because your government has friendly relations with producing nations, or because your country controls domestic supply, or because you secured strategic stockpiles before everyone else figured out what was happening. Price becomes almost irrelevant when supply is determined by government decisions rather than market forces. This has profound implications for anyone holding paper silver investments. Your futures contract says you have the right to take delivery of 5,000 ounces, but when the contract expires, what happens if there's no metal available to deliver? The exchange settles your contract in cash based on a paper price. You thought you owned silver. You actually owned a cash-settled bet on the silver price. When physical metal is trading at $130 and your contract settled at the paper price of $100, you just lost $30 per ounce of purchasing power because you held paper instead of physical. ETFs face the same problem. The prospectus says they hold physical silver, but when you look at the fine print, they have all sorts of exceptions for situations where they can't source metal. Force majeure clauses, cash settlement options, suspension of redemptions. All the language is there to protect the fund, not you. When the crisis hits and you want your metal, you find out that the legal structure gives them ways to avoid actually delivering physical silver. They'll settle you in cash, at whatever price they determine is fair, and you have no recourse. This is why the distinction between allocated physical storage and everything else matters so much. Allocated means it's your metal, with your name on it, sitting in a specific vault and you have legal title. Unallocated means you have a claim on a pool of metal along with lots of other people, and in a crisis, you're just another creditor fighting over insufficient assets. Physical in your possession means you don't depend on anyone else's promise. It's in your safe or your private vault, and when you want it, it's there. No counterparty risk, no redemption clauses, no force majeure, just you and your metal. The people who understand this are acting right now. That's what the India import numbers tell you. That's what the surge in allocated storage demand tells you. That's what the premiums on physical metal tell you. Smart money isn't waiting to see how high prices go before they buy. Smart money is securing physical metal now, while it's still available, because they understand that in 6 months or a year, availability might be the issue, not price. What good is it if silver hits $150 if you can't actually buy any because nations have locked down supply? Let me give you a historical parallel so you understand where this goes. In the 1970s, OPEC nations figured out they could weaponize oil. They cut production. They embargoed countries they didn't like. Oil prices exploded. The entire global economy went into crisis because energy is the foundation of everything. Nations that depended on imported oil got crushed by inflation, recession, and energy rationing. The countries that controlled oil supply gained enormous geopolitical leverage. They could influence foreign policy. They could extract concessions. They could determine which economies thrived and which ones struggled. That's what's happening now with silver, except the implications are even bigger, because silver isn't just about energy. It's about whether you can build the technologies that define economic and military power in the 21st century. If you can't get silver, you can't build advanced semiconductors. You can't deploy solar at scale. You can't manufacture EVs. You can't produce the weapons systems that keep you secure. You lose the competition for technological supremacy. And in the modern world, losing that competition means losing everything else. China understands this better than anyone. They watched the United States dominate global affairs for 75 years based on technological superiority. They studied how America controlled critical supply chains, semiconductors, aerospace, advanced materials. They learned that controlling the inputs to advanced technology gives you control over who can build that technology. Now they're applying the same strategy with rare earths, silver, and every other strategic material they can lock down. They're building the same dominant structure America used, just centered on different choke points. Russia's playing the same game from a different angle. They've got vast natural resources. They're strategically aligned with China against the Western Bloc. They're willing to weaponize supply to punish adversaries and reward allies. Between China's manufacturing dominance, Russia's resource wealth, and their growing partnership, they're building an alternative power structure that doesn't depend on Western institutions, Western currencies, or Western rules. Silver is one piece of that puzzle. The Western response is reactive and slow. The U.S. is trying to pass legislation for strategic stockpiles years after they should have started building them. Europe is trying to secure supply agreements with producing nations who increasingly prefer to sell to the China-Russia bloc or keep production domestic. Japan is frantically trying to diversify supply chains that got optimized for cost efficiency rather than resilience. Everyone's scrambling, but when you're scrambling, you're at a disadvantage against players who planned ahead. Mexico and Peru are in interesting positions because they're the largest producers, but they're also developing nations, trying to figure out whose bloc to align with. The U.S. has geographic proximity and historical trade relationships. China has capital, infrastructure investment, and the Belt and Road Initiative. Whoever offers the better deal gets preferred access to silver, and the other side gets squeezed. This is the new great game, and strategic materials are the prizes being fought over. For American investors, this creates a unique situation. The US dollar is still the reserve currency, but its value is being undermined by fiscal deficits and money printing. Gold and silver have historically been the hedge against currency debasement. But now silver isn't just a monetary hedge. It's become a strategic material that your own government might someday restrict or ration if supply gets tight enough. That creates urgency. If you believe silver is important for wealth protection, you need to act while you still can, because the window for free market access to physical silver is closing. The price action over the past year has been extraordinary. Silver started 2025 around $28.92 per ounce. It touched $99.14 today. That's more than a triple in 13 months. But here's the thing that should concern you. That move happened while physical supply was still relatively available. Yes, premiums were elevated. Yes, there were delays. But you could still buy silver from major dealers if you wanted it. What happens to price when nations have fully locked down exports? When strategic stockpiles are being built by multiple governments? When industrial users are hoarding frantically? And when investment demand surges because people finally understand what's happening? Some analysts are talking about $150 silver. Some are talking about $200. Robert Kiyosaki has mentioned $200. Michael Oliver, who predicted the 1987 crash, says $200 minimum by Q2 2026, possibly $500. Those numbers sound insane until you understand the supply situation. When you have structurally insufficient supply, when you have governments hoarding, when you have industrial demand that can't be reduced because technologies require silver with no substitutes, price has to go high enough to ration the remaining available supply. In a market with real shortages, price can go to levels that seem impossible until they're reality. But here's the critical point I need you to understand. Chasing price isn't the strategy. Securing physical metal is the strategy. If silver goes to $150 and you don't have any because you waited for a dip that never came, you didn't win. If silver goes to $150 and you own shares in an ETF that suspends redemptions and settles you in cash at $120, you didn't win. If silver goes to $150 but you can't buy any because nations have locked down supply, you didn't win. The only way to win is to own physical metal. Hold it in a form where you control it, and secure that position before the window closes completely. The governments and central banks already understand this. That's why Russia is allocating budget to silver reserves. That's why India is importing 400% more than normal. That's why China implemented export controls. That's why the US is trying to build strategic stockpiles. They're not looking at charts trying to time an entry point. They're acquiring metal as fast as they can because they know availability matters more than price. When nations are behaving like that, individual investors need to pay attention. Let me tell you what I think happens next. Resource nationalism accelerates. More countries implement export restrictions. Strategic stockpiling intensifies. Industrial users panic buy because supply chains are breaking. Investment demand surges as the story gets mainstream attention. Physical metal becomes increasingly hard to source. Premiums over spot price widen dramatically. The paper market starts showing stress as the gap between paper claims and physical metal becomes obvious. Delivery failures happen. Trust breaks down. Eventually, the paper system either reforms to reflect physical reality, or it collapses entirely, and physical metal trades in a completely separate market at prices that bear no relation to the paper quotes. We've seen this movie before, with other commodities. When supply gets locked down by resource nationalism, the market bifurcates. There's the official price that gets quoted, and then there's the price you actually pay if you can find metal. During various gold and silver shortages over the years, premiums have spiked to 50%, 80%, even higher in some markets. What we're experiencing now isn't a temporary shortage that gets resolved when a mine comes back online or a shipment clears customs. This is structural. This is governments making permanent strategic decisions about who gets access to critical materials. That doesn't get resolved by market forces because it's not a market situation anymore. For anyone watching this who hasn't secured physical silver yet, this is your moment of decision. You can wait and hope I'm wrong. You can wait and hope resource nationalism reverses. You can wait and hope the old market system comes back. Or you can look at what's actually happening, connect the dots, and act while you still have the opportunity. Dealers still have inventory. Premiums are elevated but not catastrophic yet. You can still get metal if you decide you want it. That might not be true 3 months from now, 6 months from now, or a year from now. I'm not telling you what to do with your money. That's your decision. But I am telling you what's happening with silver, and it's not just a market story anymore. It's a geopolitical realignment story where strategic materials have become weapons. The nations that control supply have power. The nations that don't have supply are vulnerable. And individuals who hold physical metal have something that can't be printed, debased, or confiscated through inflation and currency manipulation. In a world that's fracturing into competing blocks, hard assets become critical for preserving wealth because paper claims only work as long as the system honoring those claims remains stable and trustworthy. Watch what governments do, not what they say. China implemented controls. Russia restricted exports. Mexico licensing system. India stockpiling. US building strategic reserves. Every major player is acting like physical silver is critically important and scarce. When that's the message their actions send, you need to pay attention. The price hitting $99.14 today confirms what's been building for months. This metal stopped being a commodity and became a weapon. Make sure you understand what that means for your financial future. Before I go, make sure you subscribe to this channel because we're going to be tracking the story as it develops. Every major move in resource nationalism, every change in supply dynamics, every shift in the geopolitical landscape around strategic materials, we're covering it. Hit that subscribe button, turn on notifications, leave a comment below telling me what you think about silver being weaponized and whether you think $100 is just the beginning or if this rally's got further to run. I want to hear from you. This community is how we stay informed and ahead of the curve. And let me be clear about something. I don't know if silver tops at $100 or $150 or $200 or goes even higher. Nobody knows that. But what I do know is that the fundamental situation around supply has changed in ways that are unprecedented in modern markets. When governments start weaponizing strategic materials, the old rules don't apply. Price discovery breaks down. Market forces stop working, and the only thing that matters is whether you hold the physical asset or whether you're stuck with paper promises that might not be honored when crisis hits. You've been warned. You've got the information. You understand what's happening and why. The question is what you do about it. Are you comfortable holding paper assets and hoping the system doesn't break? Are you comfortable not having exposure to the metal that governments worldwide are treating as strategic and scarce? Are you comfortable waiting to see what happens next before you act? Those are personal decisions based on your situation and risk tolerance. But make them with your eyes open to what's actually happening in the world, not based on outdated assumptions about how markets work. Silver is no longer a commodity. It's a geopolitical weapon. Act accordingly. Thanks for watching, and I'll see you in the next one.